Hi, I'm Ebonie Caldwell with ECRP Real Estate Media, and I am here at Marketplace Mortgage, about to interview Mr. Aubrey Locke. Hi, Aubrey. You're supposed to pull the seat out for the lady.
I am sorry. This is all new, and I'm glad to be here today and discuss, how Marketplace Mortgage can help the public in terms of acquiring financing for residential properties and other different types of properties.
How long have you been a mortgage officer? How long have you been a loan officer?
I've been a loan officer over 14 years.
Over 14
but
years.
I've been in the real estate business over 28 years, so I'm an old dude.
You're old dude.
Yeah.
So
I used to do real estate investing. Probably after 5 years in the business, everybody in my family, friends, acquaintances, start to see me as a real estate expert because I was really well versed. I bought about 12 properties at the age of 29.
So you know this business.
I know the business.
So you know this business.
And then later on in life, I dealt with a lot of loan officers. I was buying properties. I was not happy with the service I was getting from them. It was very frustrating, and then I just said one day, if I could be a loan officer, I would love to help people that used to be like me without the frustrations that I went through. And I ended up finding a loan officer that really fit that bill. And I said to her, you know what, I'd love to come work with you. And she said, sure. And that's how it started. I got it.
How do you mostly get your referrals?
When I first started out, it was, I would say, 90% was word of mouth.
Why do you think that is?
Well, hopefully it's because, again, I kept my promise to service my clientele. The level of service is exceptional, so I will answer my phone and literally 24/7. I get in trouble for answering my phone 24/7. I've answered calls at 1 in the morning, 2 in the morning.
So you're not a 9-to-5 guy?
I'm not a 9-to-5 guy. And also one of the things is I keep it real. Sounds bad, but I don't sugarcoat what's happening on your file. I don't sugarcoat, something or tell you something you would like to hear. If the file is not doing good, it's not doing good.
A person they come to you for maybe, mortgage financing, maybe it's referred from a realtor or whatever. They make their first call to you. What generally are they calling for?
Well, they're calling to see if they are able to buy.
Okay.
And so one of the things we do, we want to see what their credit profile is like. In fact, I just did one quickly before you came. And then we'll, based on that credit profile, let them know if we can proceed or we cannot, and if we cannot, what we can help them with to be able to do so in the future. So that's the first step, the credit profile.
If you cannot help them, do you just say, okay, you know what, sorry, deuces, can't help you, got to go? Or do you actually refer them out or kind of work with them, put them in a separate file, but follow up?
Once you call me, you're stuck to me for life. Instantly tell them exactly what they need to do and give them a time period for them to call me back so that I could follow up that they have done what I told them to do. And most of them always call me back. And most of them, if they have done what I've told them to do, we now are in a position to buy.
As a loan officer, what's more important to you, the pre-qualification or the pre-approval?
Well, the pre-qualification and the pre-approval, the difference between a pre-qualification and pre-approval, if there's much, the pre-qualification is based on what they tell you, then you say, yes, I can help you. The pre-approval normally comes after they provide some evidence that what they told me is correct. So once they've provided check stubs, W-2s, and that type of documentation, then they're pre-approved. But without that, they are pre-qualified because I'm just going based on what they are telling me.
Highly suggest that they truly get pre-approved first.
90%, if not even higher, of the people, what they tell you is pretty accurate. If a real estate broker wants to take a client out based on a pre-qualification, I will let them know this is based on what they have told me.
Do you not suggest that they write a contract with their pre-qualification?
That is probably correct.
At Marketplace Mortgage, what type of programs you have?
That's the biggest question and the best question. So what happens is we are a broker. We're a broker outfit. And that is really huge in this market. By a broker, just like the name suggests, I work with many different programs, many different lenders that offer things that most people don't even know of. Believe it or not, right now, there are programs that you don't even have to prove your income that are coming back.
Wait.
Yeah.
Slow down.
Yeah, I know.
I'm so serious.
And let me just say that
No,
before you...
No, you don't even understand. Now, I'm 38 years old. I'm a vet in this business. I've been in this business probably since I was like 16, 17. Started off as a paper pusher, coffee pusher, whatever. But at the end of the day, I was the girl who had the mortgage companies and all of that. And I knew my mortgage stuff.
Right.
So are you trying to tell me that stated income, stated assets is pretty much almost coming back?
I didn't. Yeah, we have that program already. I didn't want to say stated income, stated
But
assets,
I mean,
because I know most people don't understand. But yes, we have that program that you can do it with 20% down. Okay?
Really?
Yeah. Then there's no income verification. We also have.
But what? Okay.
What's
the score? Because that's important. What's the score?
The score, I believe, is like 620. Not totally sure. I can find out from my lender, but
I can appreciate that.
The program exists. Also, we have programs, and this is huge that a lot of people don't know. We have a lot of self-employed people, or let me rephrase that actually. People at work that have a business on the side. So W-2 people that have a business side that write off a lot from their business on their tax return, that reduces the W-2 income, so they cannot buy because their actual tax return shows less income than they actually make on the job. We have programs that will only look at the W-2 income. They will not look at the losses from the tax return.
Let me ask you, but those are all conventional.
No.
That's FHA too?
FHA too. FHA.
Really?
See, so that's the beauty why I work for Marketplace Mortgage. As the word suggests, Marketplace Mortgage. We're out there in the marketplace.
Right.
And we know the different programs that a lot of people are not aware of. You feel the energy now? Because I love what I do.
Right.
And that's why I do what I do.
And honestly, that's why I do what I do. From the real estate, from the interviews, like, I'm the girl that likes, what? I'm the girl that's talkable, likes to talk, knowledgeable.
Yeah.
But I'm about money. I'm about connections. I'm about networking.
Right.
And for me, I do business with other realtors. I do business with everybody. If it make money, it's gonna make sense with me.
Sure.
And then that's why we here, because I want people who I do business with, who follow me, look up to me, and say, I trust this guy. I trust that what she's providing to me is accurate, is good information.
Sure.
What other programs?
Well, let's talk about that too. I like what you said. First of all, when you're dealing with somebody, I could have all these programs in the world, but if I'm not trustworthy, if I'm not the person that will actually get it accomplished, then we're wasting our time. And that's one of the things I take pride in. Sometimes to a fault, I don't have a life here. I mean, there's so many different programs with different niches, or we pronounce it right. We have so many different programs that, you know what, it's such a case by case basis. As I get clients and they tell me their issues or their certain situation, then I know how to tailor or what program best fits them. You want to hear another one? We do have a program that you can get a home one day out of bankruptcy.
Really?
Or foreclosure.
Really?
And that program in Illinois is based on the credit score. I believe, here it is, drum roll, I believe they go down to a 500 credit score, and the down payment would be anywhere from 35% down.
Is this a new program?
Yeah, 35% down to 20%, or is it 15% down. So depending on the credit score, okay, 15% down is, 85% is the max that the lender will lend. Yeah.
All of my business is referrals.
Yeah.
I don't market and look for business like everybody else.
Yeah.
I'm the most
Same
open
here.
and honest person there is.
Yeah.
The reason I'm making this statement is because I had a bankruptcy.
Yeah.
Because of the market crash.
Yeah.
I was embarrassed to do a bankruptcy. I kept saying, I'm gonna pay this, I'm gonna pay this, I'm gonna pay this, I'll do this, I got this. And at the end of the day, I couldn't no matter what happened.
Yeah.
But I did file the bankruptcy. And I think I'm maybe I think I'm either 2 years or I might be 3 years
Yeah.
out of the bankruptcy.
Yeah.
So originally you had to be 5 years out the bankruptcy or
Actually,
something like that.
FHA was 2.
FHA 2.
Conventional is 4.
Conventional is 4.
4.
So you're
this
telling
program
me
is 1 day.
right now
Yes.
that I can go buy me something right now.
Yeah, I didn't stutter. Yes.
And I don't have to spend that high $, rent
Right.
that
is
I'm
correct.
paying
That is correct.
to live great.
That is correct. And so how the lender does it, so we're clear, they can do 1 day out of bankruptcy. They'll obviously require more cash down, which is fair.
Which is
because
fair, and I
most
understand.
lenders don't do a program
Well, here's the
1 out
thing.
of bankruptcy.
You got to think about it. When a credit is, I ain't gonna say bad, but you got that bankruptcy,
Right.
realistically is, I tell
Right.
anybody, I'd rather date, this sound crazy, I'd rather date a poor man with good credit
Right.
than a rich man with bad credit.
Right.
Because at the end of the day, they
Right.
almost leverage out.
Right.
And the reality is, he's gonna be more broker in the end
Right.
with the
The bad-
with the good, I'm sorry, the bad credit, but all the money,
Right.
because they have to put so much more money down.
Exactly.
And that's the thing with
Exactly.
me. I pay cash for so much stuff, but it's
I
like it's
know.
not allowing me to really
expand. Yeah,
exactly.
I understand.
So this will help.
Yes, exactly.
Okay.
Exactly. So that's again why I am proud to work here, Marketplace Mortgage, because that's truly, as the name connotates, that we shop the marketplace and we find programs such as this.
So I'm gonna ask you this, in regards to shopping the marketplace. One of the biggest concerns I used to have being a loan officer, and even I hear my clients right now go, "Oh, I don't want this person to keep pulling my credit because they keep shopping me around." Do you keep shopping them around, or if you do shop them around, how does that affect their credit?
No. So let's this is great. I know about credit, okay? First of all, we only pull the credit once, and that same credit report is sent to different lenders when you talk about shopping around. We physically don't shop around the client. We shop them in the sense that in our minds we know the different programs. So once we pull the credit report once, we know what program pretty much to place them in. However, this is noted for the record. If you are shopping for a car, credit cards, furniture, every time that credit is pulled, you lose points on your
But not
from your
the
score.
mortgage.
But with a mortgage, the law allows you to shop around for a mortgage. So every time you pull a mortgage credit report, there is basically no effect at all on the credit report. And if I believe I heard the rule is within a 30-day period. So if I pull your credit as a mortgage company today, and you go to 20 other mortgage companies and have it pulled within the next 30 days, there is no effect on your credit.
Okay.
Because the law, the government wants you to shop around for a mortgage. It's such a big decision. And they don't allow the credit bureaus to, pull your score down for shopping. Now, if you're shopping for that Lexus or that BMW or, the high interest credit cards or the payday loans, yeah, it gets dropped every time you pull it.
So let me ask you this. What would you say your worst mortgage case was?
My worst mortgage case?
Yeah.
Oh, wow. You know what? It's hard to recall any one instant because the worst mortgage case, how to put it, it's something that happen. It doesn't really happen when the file comes in.
Of course.
Right. It's not something that the person calls you and you say, "Wow, this is going to be the worst mortgage case I have." During the loan, like they say, it happens, right? I think I missed the S and H, but it happens.
Right.
And then it becomes a nightmare. Things that clients do not tell you.
So how do you overcome it? What do you do?
Well, this is how I overcome it. It has to be something from within where I don't want to be a failure. Or if it's something I can't overcome, I let the client know the only reason it's not going because this is something you should have told me up front. I can't, I don't know your life, I don't know everything. And so now that this has happened, we can't get this done. So we can't get this done. That happens. And I have to put it kind of squarely on them.
That comes with having a realtor who understands the market
and
a realtor that understands rehabs and all of that. I can't just go get a person, Mr. Locke, let me take you to see this property for $125,000, and then all of a sudden we need to do a 203K loan that's like $100,000, but then at the end of the day, after the property is rehab, it's only worth $175.
I have one of those I have to tackle this morning where the value came in lower, and of course, I didn't want to blame the real
and then
estate
because
broker,
it's a 203K, that's FHA, which means that appraisal is going to stick with that property.
Yeah.
Okay, that's what say it does still stick with the property even on a 203K.
Yeah, best thing to do in a case like that is to try and see if we could get it done regular FHA, which is what we're doing on this file.
They just can't rehab. They got to go get money
They'd
from
have to rehab
their own credit union or
rehab it out there.
Second. Okay. How did we meet? Because I love my version of the story. I remember hanging up on him going, click. Like, people think because I'm this prissy professional woman, I'm no holds bars in this business if I can't get what I want.
Let me tell you, I hated you. I know, that's okay. I'm dying to answer this question. I love working with you because you know what? You are so much like a reflection of me. I like doers. I like people that are honest. I like people that don't sugarcoat anything. And you are wonderful. You don't pull any punches. You are a doer. I've seen you work. Heck yeah. Ebonie is number one. You go to her, she will take care of the business, and she knows I do too.
If you was to tell a first-time home buyer something, a quick tip, what would you tell them?
I mean, in terms of
just overall, just the buying process, just preparing.
Well, here's the thing: you can buy. A lot of people don't know that. A lot of people
very true
are under the assumption that their credit is bad. There's no money out there for them. They've maybe gone to a bank that has totally different standards and just figure, I can't buy. And that is not true. FHA is a government program that they would like every last single person to become a homeowner. That's what makes that program a success. And they have certain rules that make it very easy for anybody to become a homeowner.
What benefit would an investor have for you?
Well, let me just say this, and this is real. I don't
because my people use mostly hard money.
I don't work that much with investor pros, but I have something to tell you. But the thing is, all your investors, I'm sure a lot of the end buyers that they're selling to are homeowners.
Yes, they are.
So that's great. I still help investors if I'm a good loan officer that could, produce and get them their loan. Then they benefit. But I do believe we have a program, I'm going to double check it today, for investors that they could buy a property. I believe it's 15-20% down and get rehab money.
Really?
Conventional. So not hard money.
So that could be better than hard money, because hard money.
Well, the thing with hard money is
instant.
It's instant, right? And it's pretty quick. This one you have to go through conventional, and it could take a while.
You still got the 45 days. Right.
Exactly.
Hard
money come back.
Days,
there you go, 5-7 days a week. So that's the benefit with the hard money, if that's what they want to do.
So let me ask you, if someone was interested in doing business with you, how would they find you?
How would you find me? I am on the internet.
See, I tell people just Google me. I don't even have to give a website no more.
I had to think for a minute there. Do I even have my phone number out there? I am sure I do. But you can contact me at 708-439-3632.
Question. Speaking of that, because you said 708, what states is your company's licensed in?
We are licensed in Florida. I don't know if I know this. Florida, Georgia, Wisconsin, Indiana, Washington State, Michigan. Those are what I know right off the top of my head. I believe there's a couple more. But again, Georgia, Florida, Indiana, Wisconsin, Michigan, Washington State. I do most of my loans in Illinois and Indiana, so that's why.
But if I'm an Illinois buyer and I have a property over in Florida, I can still do business with you.
Yes.
So I don't have to worry about calling this other
Somebody
person
in
trying to
Florida.
get. You can take care of it. That's important for people to know.
Yeah. So we could do that.
All right, Aubrey. Well, I'm gonna go ahead and wrap this interview up.
Thank you.
And goodbye. And I'm happy
Thanks.
that you gave me the opportunity to speak with you today.
Oh, thank you.
All right.
Thank you, Emily.
Thank you. No, I don't do
you
shakes. I do hugs. I do hugs with everybody.